superiority. And this applies superiority with technicals, right? So there are a lot of indicators, a lot of setups, a lot of things that you can trade. And you've learned these, sort of like all the setups, all the indicators, and which is phenomenal because they're literally amazing. They're the best thing ever. But there's sort of what I like to call kind of like a ladder, right? So you kind of have the top and you kind of have the bottom when it comes to superiority. And most indicators and most setups and most patterns, they kind of fall in the same range. They're usually kind of all grouped together, and you kind of want to combine them together. You want to combine each of these indicators. You want to combine MACD. You want to combine stochastic. You want to combine Bollinger Band. You want to combine trend lines. You want to combine candlestick setups. You want to combine, candlestick setups, it kind of depends on which one it is, and we'll get to that in just a minute. But you want to usually combine most of the indicators you're adding to the bottom of your chart, and you want to usually combine that with moving averages. You want to combine that with Bollinger Bands, and then you want to kind of look holistically at an investment and say, like, is this a good investment or is this not a good investment based off of all this big combination of factors. And for most factors and most technical indicators and most technical setups, like that works really well, and that's the goal and that's the strat, and that's what you should do. But there are a couple of them that are just like ridiculously powerful, and they work insanely well. And to kind of put these in perspective, these are the ones that are at the top of the superiority list. They are at a completely different level. And like when you see these, you should put a lot of faith in them, like much more than you would put into traditional setups, because they just work really, 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 really well. Now I want you to understand here, what I'm about to put down here is what works best for me. It's what has personally worked best for a bulk of my students. And like, this is where I see almost every single person I teach start out. What I don't want you to think is that what I'm about to put down is some of the most influential and superior setups and analysis factors are like the only thing, because they're not. Like, there's this huge pool of potential investment factors that you should be looking at. There's this huge pool of indicators, this huge pool of setups that you can trade. And like, this big pool of things to trade is not just limited to just a couple of things at the top, and it shouldn't be limited to just a couple of things at the top. But it's important to realize that because there are so many things to choose from, like there are a couple that I'm naturally going to tend towards, and there are a couple that you're naturally going to tend towards. And so what works best for me might not be the exact same as works best for you. But if you're just starting out and you don't really know what works best, then here's the strategy. Here's what you should do, okay? I want you to kind of take what you've learned in the Stock Market Series Masterclass and then apply that with this perspective. Apply that knowing that maybe you'll make a couple of little changes on your own. But what you want to do is very, very, very simple. Basically, you want to start off with what works, and then slowly kind of add up new things, or slowly change maybe old things. Slowly make little subtle changes that'll actually allow you to do really, really, really well. But start with what works, okay? And so what I'm going to share with you is what works phenomenally well for me, and this is probably what I would recommend starting with, and then you can add things to this, you can remove things from this, you make little alterations, little changes. The first thing at the top, and pretty much like the best thing ever that I literally like owe like so much money to, is the ABCD setup. Like the ABCD setup is absolutely amazing. It's literally like the best thing on the planet. I don't like understand how people grow up not learning this in grade school with their ABCDs. Like, this should be a requirement in your like first grade stock market trading class. You should learn the ABCD setup. It's literally the best thing ever. And then next to the ABCD setup, you have to have like the head and shoulder setup. The head and shoulder setup, it's so good. And obviously also the inverted head and shoulder setup. Like, it just works so well. And it's a very, 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 very solid setup. Like, there's just not much else to say about it. It's just really good. And if you see it, it's a really, really strong play, and it also predicts price, just like the ABCD setup predicts price, right? You got your ABCD setup, and you can kind of tell looking at the ABCD setup. Okay, here's my A, here's my B, here's my C, and then here's my D. You can kind of tell, okay, this is going to be kind of my predicted price level. You kind of use some finger math, and it just kind of works. You want to sort of have like a predicted price level, and also this is kind of your stop loss level, this is your entry level. You get the same thing with the inverted head and shoulder setup, same thing with the normal head and shoulder setup, right? You got your stop loss, your entry point, and then your target. You take whatever this is, and then you just boop it on top, and that's kind of your target. And it just works really, really, really well. Like you don't really I very, very often will get into positions on a shorter term basis based exclusively off of this and nothing else because like it just works really, really well for me. So kind of figure out what works really, really, really well for you. And so with that said, I also want to put candlestick here, not for like every single candlestick pattern, but stuff like, inverted hammer candles, and I guess I'll do one in green and one in red. Like when you've got like this really, really big wick, either on the upside or on the downside, and these could be reversed. I mean, these just like predict tops and they predict bottoms really, 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 really well. You've got green, red, greens, or red, green, reds, and like at least on like longer term charts, like these predict stuff, downturns or upturns, really, 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 really well, depending on if it's that one or if it's green, red, green, right? Like it just works really, 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 really well, like without fail. Like I would base a whole position on that if it looked, solid, if it looked really reasonable, because they just work really, 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 really well, and they're what I would call like superior setups to most investments. Now I'm not going to say like every single investment you should make should be like in these groups because like you're not going to find head and shoulder setup every single day. They're not like the most common thing on the planet. They just aren't like very, very common. But you're gonna have stuff like MACD crossovers like all the time, right? And so that happens a lot more, and you can make a ton of money with MACD. Like those are phenomenal strategies, but they fall into what I like to call sort of the normal group of investments, right? So that's kind of the big difference, and the big differentiator is sort of between these like superior setups and then these normal ones, and then also another really big one, just like if you're trading on the daily chart, it's basically the most important thing that exists, and that's VWAP. And you can usually combine that with ABCD, but VWAP is just so good. Like if it just breaks VWAP and closes above, like dude, I'll buy that stuff all day, set a close stop loss, and I mean as soon as you break above VWAP, like it's just pure profit, right? And you just, I love it. Those are absolutely killer. They work like phenomenally well. And so those are kind of some really, really big ones to take away. Because if you have this like price level, and then you have your stock, right? And your stock is trending and trending and trending and trending and trending, and then it breaks the VWAP, like almost without fail, you're gonna see it go up to at least the top of the VWAP band, right? So you got your VWAP bands right here. This is like your VWAP top band. You're gonna see that work out really, 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 really well with like almost all investments. VWAP bands, and then it breaks to the VWAP, and then it goes right to the band. Sometimes it might go to the Bollinger Band instead, at least on a 1 minute chart. So VWAP bands, Bollinger Bands, you kind of have that as your target. But the entry point or the exit point, usually the entry point for a long position or the entry point for a short position, it all comes down to crossing the VWAP and then closing above or below it, right? And so those, they just work so well. It's crazy. And I saw this inverted head and shoulder setup, which is way, way, way superior in my book and all the trades I've made to an upward wedge, and I didn't really care about that. I didn't really understand that. I didn't focus on that, and because of that, I sold, and they were like, I think maybe 115. I'm not 100% sure. I don't have it in front of me, but I sold, and then they went up a bunch, right? And I made a bunch of money. That was a really good trade, but there was also a lot more on the table there. So first of all, something you could have done is sell half. But like, if you see a setup that you think it's going to go down a bunch, then it kind of makes sense to sell everything. I just didn't look at it close enough. I didn't understand the actual wedge setup wasn't as strong as the inverted head and shoulder setup. And this was not an easy inverted head and shoulder setup. And the reason why is actually pretty logical and very, very simple. And I'll add Bollinger Bands to this so that it makes a little bit more sense. But basically what happened was, there was a little bit of a W right here, but it didn't really count because it didn't reach the top of the Bollinger Bands. Usually if you have a W, you want it to reach the top of the Bollinger Bands and back, so I didn't really look at that too much. But with this head and shoulder setup, what it did was kind of interesting. I think we'll kind of finish on this because it's really, really critical. It was started at the bottom, then it went up and up and up and up, and then it made the head and shoulder setup. And usually with an inverted head and shoulder setup, and this is obviously vice versa, and it's completely the same for any other kind of setup with a normal head and shoulder setup, you want the stock price to be coming down into the head and shoulder setup. Or if it's a normal head and shoulders inverted in this side, if it's a normal head and shoulders, you want the price to be going up into the head and shoulders. And if it's an inverted head and shoulders, you want it to be going down into the head and shoulders. And that was, I think, the one thing that maybe not focus on this too much, is the price came up into the inverted head and shoulders, and usually that's not as strong as the price theoretically coming down into the inverted head and shoulders. And it also makes it more difficult to see at the beginning because you've got this upward movement, and you're usually not going to associate that with an inverted head and shoulders. Similarly, if you're going down and then you have like a normal head and shoulders, usually you're not going to see it at first because you want to see sort of upward prices going into head and shoulders, not downward prices. But anyway, this was one of those rare experiences, rare exceptions, where the price went up into it, and so that was probably, I think, one of the big reasons when I didn't actually see it at first. I saw it more as a wedge because I just didn't see these shoulders right here. So really important to actually look deeper and come a little bit closer and actually look at like shorter time frames than you normally would, because if you look at this on a monthly, which I'm pretty sure is probably what I was doing when I sold the position, you know, it doesn't look like a head and shoulders on the monthly, at least not as much. And in fact, if you look at these two candles right here, this looks like a green-red reversal. And like a green-red reversal, very, very, very strong setup, but I would not say that those candlesticks are ever going to be stronger than an inverted head and shoulder setup. And so all you have to do is you have to zoom out a little bit so you can see it better, like we just saw it on the weekly chart, instead of looking too far out. At the monthly, if you zoom in just a little bit, you can sort of transform this kind of jumbled mess of candles. It's kind of hard to understand. That's probably the really massive takeaway here. You can see the crossover too, but the really big thing here is you want to sort of look at different time periods for different setups, and then prioritize those setups that you find in terms of their individual superiority. And the moment you do that, you should be absolutely crushing it and ready to kind of take it to that next level. For me, I got in this based off of fundamentals, but I got out of it based off of wrong technicals. So you want to make sure that you make your investments based off of right technicals, or hold your long-term investments. Either way, you should come out on top in the end, as long as you know what you're doing and you're able to kind of understand market timing, market performances. I'm not saying you time the markets perfectly, but I am saying, as we talked about earlier, if you have a bubble or if you have something like an inverted yield curve, you can recognize that and be like, oh crap, maybe I should get out of this stock. So that's what I did. I did a little bit too early, but I still took a pretty solid gain on it. And it was a pretty sweet investment in the portfolio. And it paid a great dividend too. I know you can't see it here, but I probably got like 5 or 6% in dividends over the course of this holding period. And so that was kind of just like icing on the cake, which was pretty dope. So with that said, thank you so much. Hope you get a ton of value out of this module. Go out there, apply it, absolutely crush it, and I will see you in the next training. Thanks. Bye.